Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 85, published on June 17th, 2022, titled Oceans ETF, Fastest Growing Green Companies, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, if any terms are unfamiliar to you, simply Google them. Also, just a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Now, I am headlining with this article. Though it refers to Canadian companies, these companies could be of interest to investors globally. The article is titled, Meet the 50 Fastest Growing Green Companies in Canada. It's from the Outstanding Corporate Knights Group. About half of these companies are public. Here are some quotes from the article. Our objective was to identify outstanding Canadian entrepreneurs and companies that are gaining significant traction in the fight against carbon, with exciting new solutions that most of the world hasn't discovered yet. These game-changing innovators include Calgary-based Evor Technologies, which has a system to produce geothermal energy almost anywhere in the world, using looped water streams that tap the heat deep underground to augment solar and wind-powered electrical grids. Toronto-based HydroStore has another plan for augmenting wind and solar grids to free utilities from fossil-based backups such as natural gas and nuclear. HydroStore uses off-peak energy to heat utility-scale quantities of compressed air, which is stored in underground chambers until peak energy demand requires the air to drive a turbine again. In Squamish, BC, Carbon Engineering, founded by a Harvard professor, has created technologies to suck carbon dioxide right out of the atmosphere for underground storage or processing into synthetic fuels. Bill Gates is an investor. Onika Technologies, founded by the entrepreneur Dragan Tutik in Sherbrooke, Quebec, at age 23, brings affordable drinking water to coastal communities with scalable desalination systems sustainably powered by ocean waves. And one of the women leading the clean tech charge in Canada is electrical engineer Miriam Turk. Her company, Clear Blue Technologies, is bringing light and wireless service to remote regions through smart off-grid wind and solar systems. Still, most of these companies are works in progress, their ultimate fates unpredictable. In publishing this list, Corporate Knights makes no promises about their prospects or their suitability for investment. Innovation doesn't work that way, but the future depends on their success. End quotes. To see the top 25 fastest growing publicly traded green companies, click the link on this podcast's webpage and scroll down the page. Next, a massive area of concern for many investors is climate change and its effects on the world's oceans. Now, a fascinating ETF has launched with this concern, and here's an article describing it. It's titled, "An ETF to Save the Oceans Splashes into the Market." It's found on an Investopedia.com video podcast. Here are a few quotes from the transcript. The United Nations World Oceans Day is being celebrated this week, and while we should celebrate and protect our oceans every day, it's always good to focus on our most precious of natural resources, even for one day alone. And now you can invest in helping protect our oceans through a new exchange-traded fund from New Day Impact, a San Francisco-based asset management and financial technology company that brings responsible investing to those who seek investments that reflect their values. Kind of like the folks who listen to the Green Investor podcast, and of course this podcast. The New Day Ocean Health Exchange Traded Fund, which trades under the ticker AHOY, that's AHOY, launched this week, and it aims for long-term capital appreciation through investments in companies that are diverting ocean-bound plastic waste, supporting sustainable fisheries, controlling ocean acidification caused by CO2 emissions, and actively using strategies to combat ocean pollution and other threats to marine health. Doug Haskey, the CEO of New Day Impact, is behind the team bringing that ETF to market, and they are doing it with Earth Eco International, an environmental non-profit organization established by Philippe and Alexandra Cousteau in honor of their father, Philippe Cousteau Sr., and their grandfather, the legendary explorer Jacques Cousteau. Doug and Philippe are our special guests this week to talk about the launch. End quotes. Next is an article quoting CNBC.com's renowned host investor, Jim Cramer, who says he likes this alternative energy play for a high inflation environment. Quote, CNBC's Jim Cramer gave investors his blessing to buy shares of Atlantica Sustainable Infrastructure. Atlantica is a real company that sells real stuff at a profit and returns those profits to shareholders, while still having a relatively cheap stock. It's exactly what we like in this high inflation environment where the Federal Reserve is slamming the brakes on the economy, the Mad Money host said. Skyrocketing inflation and Russia's invasion of Ukraine have put pressure on the global supply of commodities, including oil, which is driving up prices of barrels and gas at the pumps. Cramer noted that high-quality alternative energy companies benefit from the skyrocketing prices. He added that Atlantica had solid results for its most recent quarter, reporting 7% comparable revenue growth and has a 5.5% dividend yield. End quote. Now, most diversified portfolios will include bonds, and they'll likely include municipal or local government bonds. However, it's rare to find a good guide for ethical and sustainable investors concerning these bonds. But this article offers some insight. For U.S. investors, a guide to ESG strategies for municipal bond investors. It's by Aaron Bigley, Mark Y., Gavin Rom, and Larry Bellinger. It's found on seekingalpha.com. Here's some quotes. Summary. Municipal bond investors increasingly want to apply environmental, social, and governance considerations to their portfolios. Next, some muni investors may want to apply ESG screening to avoid specific issuers based on personal considerations and values. Next, muni impact investing can target many important ESG-related goals, ranging from improving water supplies and mass transit to energy efficiency and economic development. End quotes. Also, you can get a good idea of what the article covers from these subheadings. They are 1. Integration, measuring ESG across muni portfolios. 2. Screening, customizing according to investor preferences. 3. Measuring ESG doesn't have to cost you. 4. Impact, improving outcomes for underserved communities. 5. Choosing a muni ESG approach hinges on investor goals. This next article from Morningstar.com in the US has this title that says it all. 2022's top sustainable funds weather a tough market. It's by Catherine Lynch. Here's some of what Ms. Lynch has to say. This year has been difficult for many ESG funds. Energy stocks have been top performers, but most sustainable strategies hold little or no oil company stocks because of the link between oil and gas consumption and climate change. At the same time, sustainable funds tend to have outsized weightings in technology stocks, many of which have taken a beating in 2022. As a result, 65% of sustainable U.S. equity funds sit at the bottom of their Morningstar category rankings in terms of year-to-date performance. Despite the headwinds in 2022, 6 sustainable funds covered by Morningstar analysts rank in the top half of their category. 5 of them carry a Morningstar analyst rating of bronze or silver. Top performing U.S. equity ESG funds: Calvert Equity, Amana Income, Amana Growth, Boston Trust Warden Small Cap, Pioneer, Calvert U.S. Large Cap Growth Responsible Index Fund. For the most part, the strong 2022 performance for this group of funds isn't limited to just this year. For the past 3 years, 5 out of the 6 landed in top 2 quintiles of performance. In addition, over the past 5 years, 4 of the 6 funds ranked in the top 10% of all funds in their respective category. U.S. equity ESG funds long-term performance. So for they have 3-year, 5-year returns and ranking and so forth. And so here are the funds: Calvert Equity, Amana Income, Amana Growth, Boston Trust Warden Small Cap, Pioneer, Calvert U.S. Large Cap Growth Responsible Index. End quotes. There's much more in this article, so I urge you to go to my podcast page and click the link to it. Other honourable mentions, not in any order, links on this podcast's page. 1. Title: Merck, a top socially responsible dividend stock with 3.1% yield, on Nasdaq.com by the Dividend Channel. 2. Title: Companies like Nexi are betting on sustainable constructions, in the New York Times by Ellen Zimmerman. 3. Title: Best ESG stocks to buy now, 3 solar energy stocks in focus, on Nasdaq.com by Joe Samuel from stockmarket.com. 4. Title: New ESG fund from engine number 1 leans on activism, on Kiplinger.com by Ellen Kennedy. Articles for UK, Australian and international investors. Again, links on this podcast webpage. 1. Title: One ASX share price opportunity I couldn't pass up if I started investing today, on fool.com.au, that's Australia, by Tristan Harrison. Well, these are my top news stories with the stock and fund tips for this podcast. Oceans ETF, fastest growing green companies. To get all the links and stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope in these deeply troubled times. Contact me if you have any questions. Thank you for listening. Talk to you next on July 1st. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.